Everything is hypothetical until the point that you get an offer accepted on a house. That's when you start bringing out the checkbooks, swiping the debit cards, and stuff gets serious. Welcome to part 3 of our 3-part series on what are the actual costs of buying a house, where we're walking through this family's journey from beginning to end. If this is the video you're watching first, I would definitely recommend you go to video number 1 of this series, which is right here. Then after that, watch video number 2, and this would be video number 3. They're only about 5-6 minutes long. They're gonna be quick, so I'd recommend you go back and do it. So the house sold for $260,000, and I actually have the physical settlement statement here to show you guys as I'm talking the actual cost the buyer had to spend. Hopefully this is going to help you determine how much you need to spend, and of course, kind of adjust in case you're in a different state and different price range. So let's get to it. So after your offer gets accepted, the first thing you need to do is deposit your earnest money. Your earnest funds are basically going to be what guarantees a property and locks you down and shows the seller you're serious. Yada yada yada. You get the point. You know what a basically holding deposit is. Normally it can be $1,000, it could be $5,000, it could be $10,000, it could be 1% of the house, it can be the whole entire down payment. I don't think that's normal, but yeah, it could be anything you want it to be. When you write out the offer, you can actually put there what the amount is going to be, and of course you could actually use it as leverage to get your offer accepted if you have a higher, nicer amount on it. And in this situation, they actually had a deposit almost 1%, $2,500 initially. Now, don't freak out. This is not money that just goes away. The earnest money deposit ends up being applied towards your cash to close, which is essentially your down payment and closing costs at the very end of the transaction, or if you got some closing costs paid by the seller, whatever's left over, the closing costs and the down payment. So once we got that settled, then we had to order an inspection. An inspection is not necessary, but highly recommended. At this point, we recommended 3 inspection companies that we recommend. And of course, they picked one of them. We scheduled the inspection. It was about a day or two of going back and forth and going over the photos and making sure that, they had any questions they had were answered. And we narrowed down that there was like a few crucial issues with the roof, a few crucial issues with like the tune-up in the AC and some other things. So it was a pretty minor situation, and we were very fortunate that the house was very well taken care of. The sellers agreed, and we moved forward. Now, before I move on, let me talk about what could potentially happen here. First and foremost, an inspection is not a pass or fail, okay? A lot of people bug me when they go, hey, did I pass inspection or did it fail inspection? That's not how it works, bro. It's for you kind of to be aware of what you're buying, and you can actually have the opportunity to back out in case you do. And you're not going to do any repairs yourself. During the escrow process, the house is not yours. You should not agree to repairs. What could happen here, though, is let's say we did our inspection and the AC is in really bad shape. It's like $5,000-$6,000. A potential situation here could be, hey, Mr. Seller, we want a brand new AC. Seller can go back and say, nah, we're not going to do that. So then you guys can, agree to a certain amount that the seller is going to give you in lieu of the AC replacement or repair. They're going to basically give you closing costs. So a lot of the transactions you see on the market that have like $1,000 or $2,000 of seller's concessions or closing cost is because of this. There's like repairs that the seller don't want to do, and they'll just throw like a few $1,000s at the buyer that essentially lessens their burden financially. Now, it's important to know that this money cannot go towards a down payment. So if you're getting all of your closing costs paid already, this money doesn't mean anything to you because you can't put it anywhere else. Only do this option if you have no closing costs being paid by the seller. So then now they're going to be paying some of that, and they're going to lessen your blow. The inspection itself only costs maybe $300 or $400. And on top of that, I think they added a roof upgrade. There's always these little upgrades that the inspection company will throw at you, like, hey, for an extra $40, we can do this. For an extra $80, we can inspect this. So I think all in all, they paid like maybe $360 for the inspection, maybe $400, and then they spend another $60 for a termite inspection, which here in AZ, termites are a problem. After the inspection, this is where the lender would call the buyer and be like, hey, I need your credit card info because we need to run the appraisal payment. So the appraisal is about $600. And yeah, most of the time you're going to have to pay for this. And it sucks because $600, come on now. That's a good amount, so it hurts. But we're using a lender that actually just orders it immediately and then gets refunded back through the seller's closing costs, or sometimes just, ends up just not just paying for it and not charging the buyer. So that's what we did with their lender. Super, super great. But in this case, I'm anticipating you're going to have to pay yours. So just a heads up. While we're waiting for the appraisal, this is a good opportunity for the buyer, which they did, to find a home insurance company. At the end of the day, you can sit down and call Geico, Progressive, and you can call Jake from State Farm. You can call freaking Liberty Mutual. You know all of them. You can call all of them. However, sometimes it makes more sense to just go with the broker. I know there's some brokers out there that just literally do the shopping for you. So whatever floats your boat, just start researching, go and finding a good deal. You want to make sure you get the cheapest annual premium. And basically the way it works is you're paying your first year with your closing cost. And every month you live in the house, you make a mortgage payment, you're making a payment towards the next year's premium. There's 12 months in a year, so you're making a 12th of the payment. So if you have a $1,200 annual premium, you're paying $100 towards your insurance every monthly payment. If you were, let's say, find a $1,000 one, well, now you're not paying $100. It's a little bit less than that. Probably enough for a few cups of Starbucks. It's definitely worth your time to take some time to shop it around here. Once we got the appraisal back, luckily for us, there was no issues here. However, there could be potentially issues for you. If the appraisal comes in low, you have to renegotiate, and maybe you're going to have to give up some closing cost amount. Maybe you're going to have to, come up a little bit out of pocket. Whatever the case may be, there is a potential here for your cost to go up. Hopefully you have a good understanding of what the seller situation is. Usually throughout the escrow process, the lender's collecting documents from you, and hopefully by then they have a conditional approval, and one of the final conditions they might need is the appraisal. So hopefully by then everything's solid and they have everything they need. And once you get issued your final approval, you can take a big sigh of relief, because that's basically the three main hurdles of buying a house: the inspection, the appraisal, and of course getting your final loan approval, because frankly, you don't know what might pop up in your credit situation until you're in the middle of an escrow. So your rate's locked down, everything's good, you're ready to go. You go do your final walkthrough. In this case, we did our walkthrough with, I think the day before closing. They went and signed, and all in all, this ended up being their cost. Total purchase price of the property was $260,000. The initial deposit from this buyer was 2,500 smackaroos. The closing funds in all were $9,839.70. The total loan amount from the mortgage company was $252,200 smackaroos. I keep saying smackaroos. So if we add up those closing funds of the $9,000 number I gave you, plus the $2,500, you get $12,339.70. The down payment was 3%. So if you do the math, $260,000 multiplied by 3% is $7,800. So if you think about it, if you get the amount of the total closings and you subtract the down payment amount, $4,539.70. So the down payment ended up being this amount, and the closing costs only added up to $4,539.70. So I want you to account for something here. This property taxes for this house was kind of cheap. So not that expensive, to be quite honest with you. And this also didn't have an HOA. Arizona doesn't have a bunch of like lawyer fees and title fees too. So if you're expecting to pay that number, probably don't. So if you have an HOA and then your house is newer and it has higher taxes, this number will probably be closer to $6,000, maybe $7,000. Or if you're like in a crazy city where things are super expensive and there's like taxes that are crazy and then there's extra fees, I'm sure it'll go up to $8,000 to $10,000 even. There was somebody once that emailed me that they were like $15,000, but it was like in Massachusetts or something like that. I guess it's high taxes over there. I don't know. But in this case, the total cost of the buyer that they had to spend was the $12,000 number I gave you earlier. So if we add up all of those fees, okay, so basically it was the total amount at the cash to close, which includes the earnest money and all of that stuff. Then there's a home inspection, right, that they had to pay for. The appraisal was part of the closing cost, and I can see it here. They actually added it toward the loan cost. Oof, I'm noticing now that they only paid $655 for their home insurance. Holy crap, that's good. So their total cost out of pocket was this. For a $260,000 house in a pretty decent area with no HOA, no taxes. What do you guys think about that amount? Pretty good? Was anybody right in their initial guess? I know it's obviously such a particular number. I would imagine that you weren't, but there you go. That's the final cost. But other than that, thank you so much for watching the 3-part series. Hope you guys liked it. I'll see you on the next video.